This is the briefing for Friday, March 11th. This week has been a really kind of an interesting week in terms of the stock indices. Really, the development of price has been pretty much on track for the analysis that I've been giving all week. First of all, we know from the briefing, the intra week briefings that I did all through the week, that the indices have spent most of this week, or I should say all of the week, in a counter trend rotation. And counter trend rotations have various characteristics. I'm not going to review all of them. I did cover them in the briefings during the week. But basically, the main thing is that sometimes they develop into three step moves. Typically, they'll work off an overbought or oversold condition fairly quickly, and they will typically happen on lower volume or declining volume. And so basically, this is the spiders. These are 60-minute charts, the spiders, the Qs, and the Russell with the IWM. And you can see that volume was falling off in each of these as the week progressed and as this counter trend rotation developed. Now, it is interesting. This was Monday's low. This was Tuesday's low. This is Tuesday's trade, Wednesday, Thursday, and Friday. And on Tuesday night, I did a briefing, and I basically did a calculation where there's equality between leg one and leg three in terms of a counter trend rotation. And that basically projected each of these right to where they came into the highs on Wednesday. And in fact, I think it was the Russell that hit it exactly to the exact point. Now, these are areas when I gave those numbers out, and those numbers basically were 428 in the spiders, 336 in the Qs, and 201 in the Russell. So you can see and that suggested then that there was a greater probability that if this was complete, that we were headed back down again. So we had to have a higher probability of one event occurring over another, of whether we're going higher or continuing, or whether we're going to be going lower. Well, we went lower on Thursday's trading, but we stopped, and this was about 50% of the distance from this low to this high. The same thing happened in all three of the indices. So then the question was, are we going back up again, or are we going back down? Mainly because a lot of times a counter trend rotation will develop into a more complex rotation, where you can see this is a 1, 2, 3. Let's use the Qs a little bit clearer. 1, 2, 3, and this is a 1. This is a 2, and a 3 projects up there. So looking at it in last night's briefing, I talked about the fact that if this is leg 1 of a more complex rotation, this is leg 2, then where would leg 3 project to? And these are the places that it projected to. And I think it had 435 in the S&Ps or the spiders. It was 344 in the NASDAQ or the Qs, and it came out to 204 in the Russell. So coming into today's trading, if we traded much above yesterday's high, then that was going to suggest that we were going to see, or I should say above the 430 level, that we were going to see a test of 435. And the same thing in the Qs. If we took out this is Wednesday's high. If we took out Wednesday's high, then that was going to suggest that we were in a more complex counter trend rotation, and these upside resistance levels would be important to watch. Now, the Russell did trade in today's trading above Wednesday's high, hitting almost a high of 202, but the other indices did not confirm that. So we did have lower volume going into throughout the week, which did suggest it was a counter trend rotation. Now, I also said on last night's briefing that if we took out this low here in each of these, this is the Thursday low, that if those lows were taken out, that would suggest that this three-step counter trend rotation, which was one strategy coming into today, was a low probability, and that the higher probability was now that we were headed back down, that this was complete, this is the beginning of another leg back to the downside, which would potentially take out this low, the low from Monday and Tuesday, and then potentially the February 24th low would be tested and taken out. And it is my prognosis, or at least my feeling right now from a longer term perspective, that the indices have more downside work to do before it's complete. Now, now that we've analyzed the short-term counter-trend rotation, I want to look at where we are potentially from a longer-term perspective. So if I'm going to switch to a weekly chart here. Now, we know that markets and stocks run and pause in all degrees of time. So this is a weekly chart with a run, pause, run, pause, run, pause, run, pause. But this is a greater degree time and price pause than this weekly trend, because it took out the previous higher low. So looking at this, then, if you look at it carefully, you can see here that this is the first leg down, this is the second leg up, and this is the third leg down. So that then suggests, where would this project to, assuming that it holds to the typical characteristics of a counter trend rotation? So basically it would project, this is the February 24th low, it would project in the spiders to about the 394 level, which is right in this area right through here. I've marked it with a trend line there. Looking at the Qs, we can do the same thing. The only problem with the Qs is that it projects a much lower, down to about the 236 level. So the Qs, or the NASDAQ, has really a lot of work to do before it would reach that level. Now, I want to be cautious on this, because it doesn't suggest that it has to go to that level. It does suggest that that's potentially the higher probability. And then if we look at the Russell has already achieved it, because that comes in right at the 191 level. And I believe this low right here is it's exactly 191 right there. So you can see that it has exceeded it. Now, this is the February 24th low in the, I'm sorry, the January 28th low. This is the February 24th low. And then you can see that it has tested really this January low that we had. So it's going to be interesting to see if this low, this February 24th, 25th low is taken out or not in the Russell. So the Russell is basically leading this move lower. Now I want to change this to a daily chart and go back to the spiders. So you can see what's happening here. Here's the 1, 2, 3. This would be the projection for leg 3 in the spiders, and you can see the lower volume. We have a volume spike here, but it's on the move to the downside right through here. This is 52-week lows minus 52-week highs. It's been negative, and it's still negative. So there's not a lot of internal strength. Looking at where we are in terms of the internals, in terms of market breadth, you can see market breadth has been declining all through the week. The same thing with the NASDAQ, market breadth declining. So basically where we are is this low, which happens to be on the 8th low. That was Tuesday's low. If that is taken out, that's going to suggest that this low from the 24th of February is going to get taken out. And if that happens, then potentially we're looking at trading back down to this low, where there would be equality between legs 1 and 3, which comes in right around the 394 level. In the Qs, once again, the Qs are much weaker. You can see this 1, 2, 3 level. It would project down to about the 236 level. So there's just really a lot more work that the Qs may have to do before it's complete. Now, we might have the spiders hit that projection, and we might have the Russell, which has already hit it, and the NASDAQ may not quite get there. But anyway, watch what happens at this low. This is a very important low for the NASDAQ. That low is basically right at the February 24th low, which comes in right around 314, and would suggest then that we're headed down substantially. I still feel, based on what I see in terms of price development and in terms of the internals, that this low will be tested. And if that low is tested, the higher probability is that it's going to get taken out. And then the next stopping price, we can only project, as I did with the three-step counter trend rotation in this briefing. Looking forward, we know that markets run and pause in all degrees of time. So if we go back to the shorter term charts, this is a 15-minute chart of the spiders and the Qs. We can see that we get these run, pause. So, and then a greater degree time frame, we're looking at basically a run, run, and before we get another pause. So summarize, basically we've hit all of the projections this week for counter trend rotation. We closed near the lows of the day. That suggests that if the market hadn't closed at 4 o'clock Eastern time, we would have gone lower. So I have to expect that, and this low was taken out with all of the indices, that the Monday's trading will most likely open up lower. If it doesn't, then what's important is going to be the high from today. Watch those highs very carefully, because even if we open up higher and continue this rotational pattern, you can see that rotational pattern right through here. Same thing with the spiders, that if we continue that rotational pattern, then that high is going to be very important. It should not be taken out. If it is, then that's going to open up, once again, the probability that we're going back up to these levels that I outlined at the beginning of this briefing. Going to be a really interesting week next week. Have a great weekend, and I'll pick this back up on Monday for subscribers who subscribe to it for the intra-week. Thank you.